In recent years, there's been a fascinating spike in interest in the world of luxury timepieces among both investors and lovers. Despite the ebb and flow of financial markets, the attraction of these horological gems has remained constant, enticing individuals looking for both aesthetic pleasure and potential financial benefit. Today, we seek to answer the question that often comes up among watch enthusiasts. Are luxury watches really a good investment? Compared to stocks, bonds, gold? Let's discuss it. Now, when it comes to investing, myriad options are available. Some prefer the stability of bonds, others chase the high returns in stocks, and some delve into the world of commodities like gold, oil, and more recently, cryptocurrencies. But where do luxury watches fit into this diverse landscape? Luxury watches have always been prized for their exquisite craftsmanship, heritage, and sometimes their limited availability. They're often seen as not just timepieces, but symbols of status and refined taste. But are they a sound investment? Let's compare. Firstly, commodities such as gold or oil have intrinsic value and are known as tangible assets. They can serve as a hedge against inflation and economic uncertainty. On the other hand, stocks represent ownership in a company and historically have provided significant returns over the long term. Bonds offer stability with fixed returns but might not match the growth potential of stocks. Luxury watches, unlike commodities or stocks, aren't direct income-generating assets. Their value is appreciated primarily due to brand reputation, rarity, and sometimes historical significance. However, unlike stocks, they don't pay dividends or have the intrinsic value of commodities. Nevertheless, some luxury watches, especially rare or vintage models, have seen their value soar at auctions, surpassing the initial retail price by significant margins. This makes them attractive to collectors and investors alike. The second-hand watch market isn't experiencing the same calmness as the 7-time BAFTA winner All Quiet on the Western Front. Purchasing a Rolex almost ensures its value, ranging from the iconic Submariner to the coveted Daytona 116500 LN will hold. Recent findings from a Morgan Stanley luxury watch report confirm this trend, emphasizing the rising popularity of vintage Rolex watches alongside Patek Philippe within Swiss watch brands. Comparatively, these watches have shown stronger growth than alternative assets like cryptocurrency and stocks. Last year, vintage watch prices only saw an 8% decrease, while the S&P 500 experienced a nearly 20% decline. Moreover, Bitcoin took a significant hit, plummeting by 65%. Indeed, the adage "time is money" holds in this context. Morgan Stanley's research note in the last quarter of 2022 highlighted the substantial increase in other manufacturers, such as Cartier and Omega. Their data, derived from watch charts, showcased the decline in performance of the Nasdaq Composite and S&P 500, with the former dropping by 33%. However, the decline in vintage watch prices remained below 10%, resulting in Swiss brands reaping benefits across various aspects. Whether you're eyeing a Rolex or considering an Audemars Piguet purchase, the demand for pre-owned luxury watches remains overwhelming while the supply remains scarce. This surge in the secondary market can be attributed to several factors, including the resurgence of interest post-pandemic, the allure of rarity and exclusivity, the influence of celebrities, and the perception of these watches as a new asset symbol. Audemars Piguet, Patek Philippe, and Rolex, revered for their precision, craftsmanship, and iconic pieces like the Royal Oak, are beloved by watch enthusiasts and collectors. However, these three major brands dominate the luxury watch sector, holding a 70% market share, which has experienced minimal impact. Despite the downturn, this impact is minute compared to the drastic 65% crash in Bitcoin and the 33% decline of the S&P 500. During the final quarter of 2022, Patek Philippe and AP experienced a 7% decrease in prices, whereas pre-owned Rolex prices only saw a 5% decline. This decline was evident in renowned models like the GMT Master II and Submariner. Interestingly, this occurred despite the continual price increases outlined in Rolex's 2023 price list. Some analysts perceive this as a process of price normalization that did impact the luxury watch market, but didn't lead to a catastrophic plunge akin to several US stock indices or Bitcoin. Contrarily, brands like Cartier, Omega, and Rolex's sibling Tudor witnessed price increases in the last 3 months of 2022. While the S&P index rose by nearly 5%, Bitcoin faced a 14% decline during the same period. Digging deeper into the statistics, Watch Charts reported that the cost of a pre-owned Rolex Daytona crossed the £40,000 mark, which is about $50,000. Presently, prices hover around £25,000, which is about $31,000, subject to the specific model, rarity, and exclusivity. These fluctuations resemble the instability seen in predicting prices, much like the fluctuating nature of the UK economy. At the start of 2022, Rolex prices surged significantly before stabilizing towards the year's end. Consequently, the question arises, is investing in Rolex a wise choice? Undoubtedly, the answer is a resounding yes. Since 2017, there has been a notable and rapid increase in Rolex sales, with a substantial surge in 2020. Even last year, the average price for a Rolex remained consistently around $14,000, starkly contrasting the figure seen in 2011, where the average hovered at approximately $5,000. If you acquire a Rolex, its value will likely double or even triple before you leave the store. An astonishing prospect. However, obtaining one is challenging. Locating an authorized dealer willing to sell a Rolex, or being patient enough to endure waiting times akin to securing Wimbledon Centre court tickets, is necessary. The Rolex waitlist has taken on an almost legendary status, akin to the tales of Jason and the Argonauts. Individuals wait for years, hoping for their name to surface on the list, or in some cases, encountering the brand's refusal to sell to individuals intending to resell the watches for a profit. Rolex, when compared to gold, real estate and stocks, emerges as the most searched watch brand online, amassing over 700,000 monthly searches. Over the past decade, this Swiss powerhouse has proven itself as an investment by outpacing various asset classes, such as gold and real estate. Despite a slight depreciation last spring, Rolex prices have remained consistently higher than retail prices. This resilience in value makes Rolex watches an attractive choice for those considering long-term investments, drawing buyers and sellers into the market. While the real market value has been evident since 2017, the burgeoning secondary market has propelled Rolex watches into a league of their own regarding investment worthiness. The demand for these watches surpasses their supply, even with Rolex producing approximately 1 million watches annually. Moreover, there are additional compelling reasons to consider investing in a Rolex. The Swiss brand is taking steps to enhance its supply's authenticity by introducing a certified pre-owned program, further bolstering the allure of owning one of its timepieces. Launched in December 2022, the new program makes it possible to purchase pre-owned watches that the brand itself has certified and guaranteed. Its aim is to bring added value to the existing supply of pre-owned Rolex watches. Because when these watches change hands, their authenticity must be attestable at the time of resale by the official retailers, Rolex announced in a press release. If you're set on purchasing a Rolex from the secondary market, be prepared. The sector shows no signs of slowing down. The prevailing cost of living crisis seems inconsequential in this realm. According to McKinsey, they project that the current value of the pre-owned luxury watch industry stands at an astounding $20.9 billion. Their forecast indicates a staggering 33% surge, propelling the industry's value to £24 billion within 2 years. Factors such as inflation, heightened demand, escalating Rolex secondary market prices, and the presence of other esteemed luxury watch brands like Patek Philippe contribute to this escalating demand. With the growing interest among millennials in collecting watches and the emergence of new digital platforms, the pre-owned luxury watch market is poised to swiftly become the fastest-growing sector. It's not solely about the heritage, craftsmanship, visual appeal, design, functionality, or status associated with owning a timepiece. Owning a piece of refined luxury is increasingly viewed as a tangible investment asset that is anticipated to hold its value over an extended period. Moreover, the re-entry of the Chinese market into this domain is expected to generate heightened interest. We anticipate a potential resurgence in pre-owned Rolex watch prices in 2024, but it's not a sure bet for watch enthusiasts. Unlike real estate or a laundromat, these timepieces have no guaranteed, consistent income stream. Predicting price increases is purely speculative and uncertain. Always make an informed decision.